Welcome to FOMO Consulting for your daily AMC stock analysis video on Monday, May 31st. Ladies and gentlemen, this may be a week you never forget. Be ready for the launch because I believe this may very well be the week. And as always, the apes are winning, the diamond hands are winning, and most importantly, the retail investor is winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel and I appreciate the support. Get into the video. So for everyone who has liked, shared, commented, and subscribed, I cannot thank you enough from the bottom of my heart. Thank you. So today we honor and we remember all that have served, that have fallen, so that we may remain free. We have our freedoms today because of our military service members, domestic and abroad, and internationally. We all pause to remember their great sacrifice and thank you for your service. So, speaking of internationally, our friends in Germany have certainly kicked the week off in grand fashion. They are up over 11%, almost $25 a share. I believe that translates to around $30 in US. So, fantastic way to start the week. Our dear friends in Germany. So let's look at the German chart over the last 6 months or so. And as you can see, it mirrors, for the better part, the US stock market chart. And you can certainly see the alligator's mouth is wide open. The last couple of weeks have been nothing short of parabolic. The RSI had to cool off and MACD is fully bullish. So well done, our friends in Germany. So a quick reminder of last Friday's close, $26.12, down 58 cents and down after hours. No big deal. What I found the most reassuring about last Friday's action was, even though there was a sell-off, it was somewhat disappointing, obviously, the way pre-market started, is that we consolidated the second half of the day in and around the $26 level and found absolute solid support at that level. And I believe we are set to go this week. So let me remind you, 6 of the past 8 Mondays have been green. 3 of those 6 have been 13% or better. We are no doubt set up for a very bullish Tuesday, I believe, especially based on the information coming out of Germany. So I am looking very much forward to tomorrow. So let me show you a few stocks that have been kind of associated with AMC, GME, and others for several months now. COS has certainly spiked over the last 2 months. That is no surprise. IWM has jumped. BlackBerry has jumped. Certainly GameStop has came alive. And SFYF, which is yet another ETF, heavily tied up with AMC, has came alive. There is no surprise about these jumps, as we've all been somewhat interconnected for many, many months. So let me remind everybody, I've had many questions about the alligator indicator. So let me just quickly review this. Legendary trader Bill Williams, an early pioneer of market psychology, developed the trend following alligator indicator, which follows the premise that financial markets and individual securities trend just 15 to 30% of the time, while grinding through sideways ranges the other 70 to 85% of the time. Williams believed that individuals and institutions tend to collect most of their profits during strongly trending periods. So let's see what that is. The Williams indicator is a technical analysis tool that uses smooth moving averages. The indicator uses a smooth moving average calculated with a simple moving average to start. It uses 3 moving averages set at 5, 8, and 13 day periods. The 3 moving averages comprise of the jaw, teeth, and lips of the alligator. So let's look. So the jaw is the blue line, starts with 13. Always the 13-day moving average is certainly a slower trend line. The teeth are the red line, which is an 8-day moving average, somewhat more sensitive. And the more sensitive is the lips on the top, which would be the green line, and is certainly more on the 5-day. So just a quick review yet again, the 3 lines stretched apart and moving higher or lower denote trending periods in which long or short positions should be maintained and managed. This is referred to as the alligator eating with mouth wide open. No doubt we are eating with mouth wide open, as you can see on the far right for AMC. Those trend lines, the green lips, red teeth, blue bottom jaw, mouth is wide open, and the alligator's hungry, and it is eating hedgies and shorts. Enjoy. So also, as you can see, MACD is fully bullish. RSI certainly needed to cool off on Friday. Our move downwards just a bit was actually very, very good. So let's look at AMC over many, many months and several years. You can see the last 2 weeks how absolute parabolically we've moved. You can look on the bottom left at the green indicators. That was at the highest trading point in AMC's history in around the mid 30 range, which we touched last week. You can see the RSI got into slightly overbought territory and it came back down. MACD was certainly bullish, but it was certainly not in the position it's in today with heavy shorting and apes holding the floor at that point. Again, it touched it briefly, as you can see in the middle of the chart, but more recently you can see where the RSI has briefly spiked over the 70 line, and you look at where we at today. I believe we still have a lot more room to run in that regard. I believe we can still tick up and be okay on a much, much longer scale. But if you look at the red line where we touched last week at our highest point in the close to $37, we closed on the orange line at 26.12. And the green line is the baby squeeze level back in late January. So you can see just the absolute enormity of where we've come in a very, very short period of time. A little bit closer look, alligator's mouth wide open, MACD clearly bullish, RSI slightly in the overbought range. We could cool off just a bit or at least flatten out, but we still have a bit more room to run. So if you look here at GME, you can see a similar phenomenon. It gets into the overbought situation on the RSI, has to go down, cool off, and right before the baby squeeze, or excuse me, the large squeeze back in late January, it certainly rocketed up, stayed up for the better part of the day. No problem. Again, this was on the 4-hour chart. On the hourly chart, and we certainly have room to spike, and you can see even when we come down, the price still can go up even after we cool off. So let's look a little closer at AMC. As you can see, bottom right, MACD had to cool off. We got above the 70 line on RSI, and now we are completely poised to run up yet again, and I believe that we'll follow that GME RSI trend into this week. So yet again, some great news around AMC. Ended up obviously last week 116% in 1 week, which is ridiculous. Shorts are down just on AMC alone, 1.2 billion after just last week alone. Vandatrack believes that the heavy buying will continue over the next few days. Even our detractors are coming around, but S3, EHOR, everyone knows, we are now at a 10 out of 10 level for a short squeeze on all the indicators. No guarantee there will be one, but certainly all the indicators are lining up. So fantastic for AMC, the business, the industry as a whole, and really society as a whole. That masks are no longer mandated at AMC theaters as well as others. If you are vaccinated, that is absolutely huge. Again, stripping off some of that FUD, right? Quiet Place 2, absolutely having a fantastic weekend. Fast and Furious internationally has not opened in the US, Canada, 163 million. Quiet Place 2, again, biggest opening weekend since pandemic. Absolutely huge. It's driving a lot of FOMO, and I believe there's going to be a lot of institutional buyers and a lot of FOMO buyers jumping in tomorrow. And to our opponents who continue to hold and short AMC, AMC is accepting applications nationwide. So yet again, on Ortex, trading signals last week indicated a short squeeze of type 3 imminent. Certainly, we are in a very delicate place where this could launch at any time. Vortex data still trending. Nothing really changed from that perspective, certainly over the holiday weekend, but utilization near 100%, cost to borrow 9%, but they actually borrowed more shares. We're up to nearly 133 million shares borrowed, which is about 4 million higher than the days prior. Institutions continue to buy in heavily. So everything is absolutely perfect, and there was one short owner that covered. As you can see at the bottom, at the 46, there were 47 the days prior. So you can look at what the volume did on Friday, 653 million. We turned over all of the public float nearly 1.5 times. We own 314 million shares, at least based on these percentages from my Fidelity account of the 493 shares outstanding, and they have borrowed 133 million based on 135 million owned by institutions from 13F filings. So you can certainly see where they are taking advantage of every share they can possibly get their hands on. But the fact that they turned over, or we turned over, nearly 1.5 times the free float is mind-boggling, especially if we're holding. The algos were clearly at working overtime the last week. So this is what makes me the most bullish. They, based on this information and the price rise from last week versus mid-March and in late January, they certainly did not cover. They are somewhat in a holding pattern, it would appear. They are borrowing more shares to write it up, but they are trapped. They cannot get out of their positions. They cannot cover because there are not enough shares available because of our buying and holding, as well as institutions buying and holding to cover. So they are forced to just hang on until the shares become available. The more and more I look at this, the more and more bullish and excited I become, and I'll show you another look. So if you look back in mid-March, where and some of you have been with me, have seen this a million times, but you look at the range of which they covered on the short interest trend lines, where they got out when the price ran up to 14.50. They dive bombed it, they got out, they borrowed more shares to short, and then they wrote it back down. You can clearly see that on the gray borrowed share volume bars. But the range of which they got out of their positions, and again, that was a run up to only $14. The range of which they got out of their positions over the last 2 weeks is far smaller, even though the price nearly tripled, right? Because keep in mind, just last Monday, we were at $12. They can't cover because I don't believe there's enough shares to cover. So the theory of buying and holding may very well drive this price up. So there were 191,000 call contracts expired in the money. Tomorrow, again, should be exceptionally bullish in and of itself, for that matter. So, again, I'm looking very, very forward to tomorrow. More importantly, if you look at $39, there's nearly 18,000 in open interest just as of Friday, expiring this Friday, June 4th. And they have extended the call option availability down to or up to $73. Obviously, it's empty because there's no activity, because obviously it's hard to trade options unless except during market opening. So I'm very interested to see how this range fills in as the week goes on. Yet again, if you look expiring on June 18th, you have nearly 250,000 call contracts at $40 to expire on June 18th. Exceptionally bullish. So this is what this week kind of looks like without all the new contracts that need to get filled in, you know, on the higher price points. But right now we have a consolidation in and around between 30 and 35. 39 again has nearly 18,000 in open interest. On the low side, obviously around 20 to 23, you've got 12 and 13,000. I hate to even try to predict this week based on the volatility and whatever. I do believe we will get to the 30s, just not sure where in the 30s. So just my particular thoughts. So let's end with a quote. If everyone is thinking alike, then someone isn't thinking, by General George S. Patton. Certainly, there's a lot of people coming up with new ideas, doing their own due diligence, sharing due diligence. Our opponent seems to be single-minded in the belief that we're all crazy. Uh, we certainly have their number, and they know it. We have done the research. We are continuing to share, and that is the most reassuring thing for me personally is the information sharing and everyone's collective efforts and belief. So I cannot, again, thank you all enough for giving me the reassurance to continue this as well as what I provide to you. So again, I want to thank everyone for watching. If you found the video informative and entertaining, please like, share, comment, and subscribe. It is a newer channel. Appreciate your support. But as always, I hope you have a wonderful Memorial Day and your life is full of green candles. Take care. I'll talk to you soon.